So in our last session, we looked at how to fuel an energy transition that balances growth and decarbonization. In this next session, we're going to be looking at who will invest and what it takes to build the infrastructure and generating capacity for that low carbon economy. So to take this conversation, we've assembled 4 leading experts for you. I'd like to invite them up onto stage. Hi, how are you? Welcome. Thanks so much. Rudra, you can sit here.
Thank you.
Please have a seat. We can, if you want to stay close, then we won't have a spare chair, because our spare chair is reserved for our virtual panelists.
All right,
come on in.
Yeah.
Come on in. So, well, first of all, very delighted to have you all. Rudra Dalmia, co-founder, Green Frontier Capital. How are you today?
Very well, thank you.
Excellent. We've got Nitin over here. We can't let you go too far away. You need to be somewhere near the stage. Thank you so much for being here. How are you?
I'm all good.
Excellent. And Hisham Mundal, Chief Advisor, Environmental Defence Fund in India. And joining us virtually, we have the lead climate specialist from the World Bank Group, Thomas Kerr. How are you, Thomas?
I'm great. Great to be here. Thank you for having me.
Great. Thanks for being here. So I want to ask all 4 of you the same basic question. It's a broad question. I'll just bounce this to you. How do we generate the level of investment that we need to fund the infrastructure and innovation that's required to transition off of fossil fuels? Thomas, we'll start with you virtually.
Thank you so much, and thanks for having me virtually. I've just returned from 2 weeks in India, so unfortunately I couldn't be with you in person, but it's been a fascinating conversation. So I think, coming out of India, it was really apparent that India is already accelerating towards this sort of climate and green transition in the country. There is a lot of energy and enthusiasm around the government's net zero targets and its climate pledges. And so the government has set the direction of travel, but we've also seen, interestingly, about, I think, 80 major Indian companies have set net zero targets for their own operations. So you have the government and the private sector setting the mood music, if you will, and then we now need, according to the government, around $170 billion per year to fund these transitions in key sectors. So the key thing is that obviously with post-COVID and with the current situation, that the government can't do this all itself. It has to be leveraging the private sector and private finance to fill the gap. And so how do we do this? I think what we saw in a series of conversations with the private sector is that there are 3 sort of key ways that we need to target. One is on setting the right policy framework and moving that along. The second is we need a targeted use that, we do have public funding, but it has to be used in a very surgically targeted way to leverage private finance. And the third, we need to create market incentives for the private sector. So let me just go through these each briefly in turn. So around the policy frameworks, the government of India actually knows how to do this. So let's take solar, for example. I used to work at the International Energy Agency, and about 10 or 12 years ago, India really wasn't on the map in terms of solar power. Now you fast forward to today, through a targeted mix of carrots and sticks, so government incentives, as well as some mandates for, let's say, utilities to purchase green power, and also the public and private sector coming in together and de-risking. We are now seeing India is the 5th largest global solar market. I think about $70 billion have flown into the sector, and it's the cheapest delivery cost of solar around the world. So now we need to replicate that for e-mobility, for green hydrogen, for other green solutions. And we need to, in particular, we learned when we were in India last week, was that there's a patchwork in particular around e-mobility at the state and the federal level. So we need to fix that problem. I think secondly is the blended finance or concessional finance. So for those who don't understand that term, it's really a very simple, there's a limited pool of public money. If you put it in the right places, it can de-risk and aggregate projects to make it attractive to the private sector. In some ways, sort of bridging that viability gap that some technologies face to get to market right now. This concessional finance is sort of nascent in India, but we at the World Bank and also the government are looking very actively at how do we create these pools of money and provide technical assistance, provide risk underwriting, and create market incentives for these technologies. And I think one thing we need to do is better understand what is that viability gap sector by sector and do a map there. The final piece, I think, is around the incentives that the market can place. And here, it's great to see India recently amended the Energy Conservation Act, and it's going to be implementing a carbon market. And a carbon market is something we heard loud and clear from the private sector that they would like to see happen. This is really critical for those sort of hard to abate sectors like cement, steel, and the heavy emitters, because they need a larger boost of capital. These technologies are not as viable. But we've done some analysis, and I think that with the well-designed carbon market, we could cut the cost of India's NDC compliance by about half, by about $250 billion by 2030. And what this requires, though, is we have had experience in India around the perform, achieve, trade, and renewable energy certificates. So people have seen market mechanisms work. But it's a bit of a Wild West right now. We need some standards, we need some certainty, and we need credibility in the market. So we at the World Bank are helping the Ministry of Environment and Climate Change to develop sort of the key infrastructure for that carbon market. Things like registries, monitoring, reporting, and verification. And we need to ensure that these credits are actually following a methodology, and that no one else is claiming this as a sort of double counting to avoid that. So I think with those three pieces in place, as I said, the mood music is really strong, and it's really exciting to see India accelerating along this transition. I think so with the right mix of smart carrots and sticks, policies and standards, and also a federal and state coordination at the holistic level. I think second, with then using the limited public finance in a targeted way through things like concessional finance and setting in the right policies for that. We at the World Bank and the government of India can catalyze these technologies. And third, through the placement of a carbon market, we can get some of these technologies. I think we heard like around $40 a ton of a carbon market would actually put that green hydrogen and some of these solutions over the finish line and make them attractive. So with that basket of solutions, I think we're going to see some progress. And the good news is we're seeing progress on all fronts, according to my recent trip to India. So over to you. Thank you very much.
Thank you. Well, that was a great way to kick us off. Rudra, let's come to you with a similar question, and just building on what we heard from Thomas. What do you think we need to? How will we generate the level of investment that's needed to fund the infrastructure and innovation to get us off of fossil fuels?
So going back to, can you hear me?
Keep going. Yep.
So going back to what Thomas said, blended finance is the key word, and I think the world, and this is where now we use the word global north, needs to come through with like longer tenure bonds or short-term paper or long-term paper, which allows risk capital like ours to support early stage companies and finance their journey at the stage of scale up, because that is the riskiest part of the scale up. And Thomas will agree that this is how most of infrastructure in the US was built back in the day, by creating long-term paper. The big challenge in countries like ours is the hedging costs are very, very high. So when we bring money from the US to India, it's already sitting at, even risk-free rate is at 5-6% now. You add hedging costs, it goes up to 11-12%.
So how do we de-risk that?
The governments will have to work together, create guarantees for reduce hedging costs, essentially. I mean, if we can get paper at 4-5% at long-term, and in a very structured way in long-term projects, because environment is a long-term project. This is not a digital economy where you'll go viral like Facebook or Paytm or Alibaba. None of that will happen. So this needs to physically build, physically make an impact. And second most important thing is with so much capital coming in this direction, you start seeing greenwashing and other challenges. So to come up with a smart measuring yardstick in order to ensure that capital continues to flow, and we will have some hits and misses around people trying to use the system in their favor. But the more, if you can't measure it, you can't create an impact around it and create incentives around it. So the carrot has to be around measurement, and the stick has to be around creating sort of disincentives to use fossils. But I don't see that happening in the next 2-3 years because of the current geopolitical situation. So I'm hoping that agencies like the World Bank sort of intermediate this conversation between the global north and the global south and bring capital to us for long-term paper, and hopefully the governments will work together to underwrite the risk premium around hedging. And that's the only way I see this, because the rest the private sector will figure out. It's this sort of gap that needs to be sorted out, because the opportunity is massive and everybody is committed and enough capital is chasing this sector. I'm sure Thomas will agree.
Yeah, I wonder, Nitin, let's bring you in. There's been we've discussed a lot of things already. We've heard blended finance, talking about de-risking the hedging costs, the carbon market. What would you see in terms of what's needed in terms of getting the level of investment to transition us off of fossil fuels?
Yeah. So the way I look at the whole green infrastructure and climate infrastructure has many different aspects to it. Okay, some, the large institutions can get involved to solve, but let me take a different approach here. So I think one of the ways for us to really look at is what I call start small and start wide. So what I mean by that is, let people identify different challenges in terms of the infrastructure, which green infrastructure they want to actually try it and build, and then test it out. So how it actually, I would like to share an example from what Indonesia did, something interesting. So they created a platform called PTSMI, and they started working with a lot of foundations and the kind of a blended office. So what happened was they went to each foundation. They said, what is that one part of the climate you passionately care about? Okay, and they asked them to test run it in their hometown or wherever the factory is based. And then from the learnings from there, and if they realized that something is working well, and the government got involved to scale it up. And something where it was not working well, they took the learning back to see what can be done better so that they could be able to scale it up. So that is one way to solve this problem. Coming back to what Rudy said, is because it's a long gestation and very capital intensive. So not everybody has the capacity. Not every government, every country will have the capacity to solve it. So best way is, one way is to start small, start wide, see what works, and then you start attracting bigger capital pool to come in to take it to the next level. So that will be my approach, a bit different than what was discussed.
Interesting. So Hisham, we also need to focus on research and development. Give India a grade from A to F on how it's done so far in R&D, either in the private sector or from the government.
So unfortunately, it wouldn't be a particularly high grade. India hasn't invested, as a nation, we haven't invested in R&D enough. For those of you who are not familiar, we spend 0.65% of our GDP on R&D compared to 1.5%, which is what other industrialized countries are doing. Within that, so this is the whole of the country, within that, 40% of India's R&D spend comes from the private sector. In industrialized countries, it's 70%. So India needs to spend more, and private, corporate India needs to spend more. I think the question is going to be, why should they spend more? And the view that we have is it is both a strategic imperative for the country, and it is a business lever for your enterprise. What does it mean for the country? Is India going to be dependent on technologies developed by somebody else on critical mineral alternatives to batteries, or somebody that brings down the price of hydrogen from 4 or 5 to 1? In this post-globalization world, if I may describe it as such, it's now become everyone to themselves, and that's a harsh reality of life. And India would be well served to start building that capacity itself rather than depend on others. From a corporate point of view, I want to give the example of the cement sector. It's an odd term, but Indian cement is the greenest cement on the planet. 85% of India's cement is used using fly ash, which is a waste product from a thermal power plant. 40 to 50% of India's cement is used using renewables, and Indian cement uses about 10 to 15% lower heat than most other cements. Now, why has this happened? Sure, progressive cement companies that want to make a difference to the planet, but also it improves the bottom line. And we need to hold up examples like this to inspire and perspire the rest of industry to move forward. So we need these example industries to be out there. We need the government to start giving in research-linked incentives the way they have production-linked incentives. You need specific incentives to manufacturing green rather than manufacturing in any color. And then there are some simple, smart techniques that the government can use, like aggregate demand. What are they doing with electric buses? Instead of having each individual city bid for electric buses, they are aggregating it together. Not every city has the ability to figure out how to buy an electric bus and the tech specs around it. some central authority does it, and then you're able to accelerate deployment of a technology which would otherwise have taken 5 years. You can do it in 1 or 2.
Interesting. I can't believe how fast time is going. Thomas, I want to bring you back in. I wonder if we take an issue like green steel, for example. How are we going to bring the financing to bring steel to market as fast as we need it?
Yeah, so I would like to pick up on what the previous speaker just mentioned. I think, and slightly disagree, but slightly agree. First is it's so clear you need a systems approach. We don't have time to sort of have every Indian state and every part of it, every company sort of explore its own little project around green steel or green hydrogen. And so I think what we learn talking to companies is that there's a patchwork of approaches. Different states have different programs and initiatives, and we really need to we have a green hydrogen mission, but we need to kind of elevate that and create more cohesion around that at the national level. But then where I'll disagree is I do think that we need to cooperate internationally. So we have a green steel plant operating in Europe now. How did it happen? It happened a lot through government incentives, and I think we also need more demand pull from the government in terms of procurement or green steel purchasing mandates, and so that creates a market for this green steel, and that can help change the marketplace. But then we do need to collaborate with Japan, the U.S., and Europe, we're all trying to learn how to do this at the same time, and we don't have the luxury of time in terms of the climate is not giving us the time to sort of learn separately. So by creating some sort of platform where learnings from the early pilots can be shared, and then we can try to accelerate each country's journey towards green steel, I think will be much better place, and I think you'll see finance flowing much quicker.
Interesting. I'll allow you to come back on that, Hisham. Do you want to come back on to Thomas?
Just a very quick one. The US IRA bill, great bill as far as climate is concerned for the US. It ring fences several $100 billion on make in US, build in US, design in US. The European Union does some amazing policy work on circular economy, etc. But what goes hand in hand with that is enormous funding options to companies located in Europe. It's not an even playing field. And that's the concern that's out there. And just one other quick one on green steel. The assumption is if we have to double steel over the next 8 years, we need to double our production. We don't need to. There's a lot of steel that we can theoretically make using recycling, but right now we're not able to attract enough scrap steel, so government policies need to change. And Tom, don't get me wrong, love cooperation. We should cooperate.
Time is very brief, so I'm going to allow Rudra and Nitin to come in briefly on a question each. Rudra, starting with you, what's the one thing as an investor you'd like more of from government?
Just clarity of measurement. If they can measure impact, if they can help create a framework, it'll create a carbon market on top of it. It'll create the ability for us to showcase that our portfolio companies are doing X, Y, Z to improve to mitigate climate risks. And that will also give us the ability to attract higher quality capital towards our portfolio companies. So just policy on measurement and impact.
Interesting. Measurement and impact, Nitin?
Yeah, so I will add, along with policies, they should focus on investing in research and development because it's a very capital intensive. So they have the capacity to actually do that. So if we have research, we have great policies, the money will come.
Interesting. Well, time is up. Once again, pulling the plug on us. But thank you very much, gentlemen, for joining us. Ladies and gentlemen, give them a huge round of applause. Thank you so much.
Thank you.